Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 9th of October. Starting off with the FTSE 100, which has actually bounced back rather better than expected. It wasn't a big rug pull down towards 8,000 or even down to last month's support around the 81.60 level. In fact, we bounced higher than that, which is potentially a positive. The 50-day line there, the resistance in the first instance, so around 82.60, and then above that, looking for the top of the range, 83.50. But to the moment, the main thing is that we can stay on the right side of the 8200 level. If we do break down back below that uptrend line from February, around 81.80, then there is the risk of a move down to the 200-day moving average, currently around 80.35. But after yesterday's rug pull, it looks as though that is perhaps less likely than it could have been. Moving on to the DAX, and here the picture, a decent one actually, with old resistance becoming new support around 19,000. Above that, we're rather simply looking for a retest of 19,500, the best level of last month, and then up to 20,100 perhaps as a best case scenario target for the end of this month. The worst at the moment, probably now the 50-day line at 18,500, and ideally not even lower than 18,800. RSI bouncing above the neutral 50 level at 56, so that does give the impression we are ready just to head higher from the 19,000 area. Next up is the Dow, and here you can see that the market really copying the DAX with good support above and around old resistance. In fact, we're a bit higher than the old resistance, 41,600, new support around 41,800, and that makes us all the more confident that we will hit the top of that rising trend channel, 43,300, by the end of this month. RSI at 57, so right in the box seat for further gains. Probably an end of day close through 42,300 could be the trigger on an assault on fresh highs. Next up is Bitcoin, which is continuing to disappoint in an aggressive way. Here we've had, so far for October, a bull trap through the 200-day moving average, 63,600, and support above the rising 50-day line, 60,500. Not really much you can say about that at all. We're in the upper part of that falling trend channel from back in March, which is a positive, but obviously not making that headroom or the progress towards 67,600 and the top of the channel that we would like. Moving on to gold, and here it's a case of a bit of a rug pull here. We drew a rather steeper rising trend channel, but in fact it looks as though the June trend channel there is actually a little bit too optimistic at this stage. Basically, we hit the top of the December trend channel, 2,700, and we've come back from there. The old September resistance around 2620, so that's hopefully going to be support. Below that, then we have the risk of a move down to the 50-day line, 25.85. But for now, it's just a matter of how far this market will retrace. If we do get through 2,700, hopefully in the next week or two, then the best case scenario target here now at 28.80 by the end of next month. But that assumes that we stay on the right side of 2,600. Moving on to crude, which had a little bounce from below the $70 a barrel level, but even here you can see that we have another failure at the 200-day moving average at $77, so not able to get up to the top of that falling trend channel. Basically, it's been a range play between, say, 66 and 77. The only thing we're waiting for now is to see whether support will come in at the 50-day line, 72.37, and then take this market higher up to $80 plus. Moving on to the stocks, and the cupboard really bare at the moment. Actually, difficult to drum up a decent selection. One of the better situations, though, which is actually pleasing to see, is Cobra. They were in town last week, and so obviously people seem to be happy with them. The target here, the technical target here, up to 1.47, so we're just a fraction off that. That was obviously also the old high in March, or the high area in March. The other positive, which I don't think I mentioned before, is that we have the 50 and 200-day lines both rising, so that's a golden cross, and we've also had a couple of gaps to the upside in the recent past, so that suggests that we do have decent momentum here above 1.5 pence, looking for up to 2.1 pence, the upper parallel of that broadening triangle base, and looking for 2.1 pence by the end of next month, maybe even by the end of this month. I suppose placings and other activities notwithstanding. Upside valid at least while we're above 1.3 pence, which was the pre June resistance for the shares. Moving on to a stock which everyone I seem to meet, or everyone I meet seems to be saying, oh, this is a recovery situation, CAB payments. The good thing about the situation now is that we've got both the 50 and 200-day lines rising, which is always a nice thing to happen, given that the next time they cross, hopefully in a few weeks' time, it will be a golden cross. That tends to be the strongest part of the cycle, and that means that we are justified in looking for £1.34 at the top of that rising trend channel from February, and that would also take the shares back to where they were in July. I think the other detail to look at is the way that today we've closed that gap, the September gap down that we had. So an end of day close above £1.10 would be the technical buy signal for a move to £1.34, hopefully by the end of this month. At this stage, only back below that broken red resistance line there from May at 107, really delaying the upside scenario. Moving on to stock which I think I covered a few days ago, Corero Network, with one of the finest charts around, with the step progression, which you only see in the strongest of situations, really sort of suggests there's almost no selling there at all. Just a one-way valve in terms of the price action. Looking for 28 to 29 pence by the end of this month, and also hoping this latest move will actually accelerate as the shares gather momentum with the rising 50 and 200-day moving averages. Upside value while we hold above the old July peak there, just around 20 pence. Next up is ECR, which has had I think, triple news in the recent past of one kind or another, and looking for the shares to hit the top of that falling trend channel at 0.32 over the next few days. What would also be exciting is if both the 50 and 200-day lines were rising. That means we were heading into a golden cross, and I suppose if you look closely, it looks as though both the 50 and 200-day lines are currently rising, so that would be an exciting development and hopefully suggest that by the end of next month we could be on the right side of 0.4. Upside valid here to the low 30s while we're above the 50-day line there at 0.25. Next up is EnergyPathways, which is attempting to continue its extended run of recovery. What's good here is that we found support above the old February resistance there around 3.25 pence intraday, and above that still looking for 4.5 pence perhaps by the end of this month. And nice hammer candle so far today. The only missing ingredient, I suppose, is to get that 200-day line rising, and then we're going into a golden cross which could accelerate the upside yet further. Moving on to Genedrive, which has for now stopped coming up with fundraisers. At the moment, though, we're looking at a situation where we're trying to break this line of resistance there around 2.3 pence. If we can do that on an end-of-day close basis, then we're looking up to the 200-day line once again. You can see the shares failing at the 200-day line in the recent past. That's the 3.75 pence. If you're cautious, maybe wait for an end-of-day close above the 50-day line at 2.5, but really it's the end-of-day close above the September resistance at 2.3 that the bulls will be looking for. On to the last three. First one is Neo Energy, which obviously I interviewed Jason Brewer last week. A rebound off a sharply rising 50-day line, which means we're looking for 1.4 pence hopefully over the next couple of weeks, and obviously a retest of the best levels towards 1.8 pence, maybe by the end of next month or even sooner. But the key here is to stay on the right side of that 50-day line at 1.05. On to Ovoca, which was a winner, I think, last month, just for a few days. Here we've got a situation where we've got a rising trend channel there, the black channel there, 1.7 pence the target by the end of this month, while we're above a penny and the floor of the channel. Interesting to see the 50 and 200-day lines trying to rise after the bear trap gap reversal that we had last month. So could be, we'll see Ovoca 2.0 in terms of the rally that we had last month. Finishing off with Triad, which is another example of a decent rising trend channel. Not quite as good as the other one that we were watching just a few minutes ago at Corero, but here, rising trend channel from back in November, top of the channel there, heading with £3.80, which we're looking for by the end of next month, while we remain above recent resistance at £2.84. That's it from me today. More updates tomorrow.